I kindly request everyone to settle down and switch the phones to silent mode. Namaste. On behalf of our chairperson, Priya Gazdar, and her committee, I, Sujita Chityala, Honorary Secretary of Flow Hyderabad, extend a warm welcome to our speakers, Ms. Shanti Mohan and Mr. Subrata Mitra, our distinguished past chairs, special invitees, and fellow Flow members. May I now request everyone to please rise for the national anthem.
Janagana mana adhinayaka jaya he Bharat bhagya vidhata Punjab Sindh Gujarat Maratha Dravida Utkala Vanga Vindhya Himachala Yamuna Ganga Uchchala Jaladhi Taranga तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
Flow Chairperson Priya Gazdar, our distinguished speakers, and Flow past chairs Jyotsna Angara, Vani Subhash, Usha Rani Manne, and Y-Flow past chair Aarti Shah, Flow Chairperson Riddhi Jain, to step forward for lamp lighting. As we light this lamp, let it remind us that even the smallest light can dispel the deepest darkness. Chairperson Priya Gazdar will now deliver her welcome address.
Namaste. Good afternoon. Speakers of the day, Mr. Subrata Mitra and Ms. Shanti Mohan, special invitees, past chairpersons Flow and Y-Flow, and my dear members. It was the 1880s. A war was on between Thomas Alva Edison and Nikola Tesla. Edison was a proponent of direct current, while Tesla supported alternating current. Finance titan J.P. Morgan backed Edison, becoming the first true technology venture capitalist and beta user too, as Edison installed light bulbs throughout Morgan's estate. Edison's direct current won that particular war, and Morgan's instinct paid off handsomely. He decided to go further and had Edison electrify his office building. But the very noisy small steam engine that kept the power running became a problem. With some more funding, Edison solved the problem, which led to something bigger and better, moving away from an individual power supply to a more universal supply. Eventually, Edison, with Morgan's financial backing, began the process to electrify the city of New York. And J.P. Morgan, whose company had backed Edison, became what we know today as General Electric. In today's conversation with our two illustrious guests, we'll learn how brave and discerning venture capitalists have laid the foundation for a smarter, more efficient world, and how venture capital is a key driver of innovation. At Flow, we are no less committed to making the world a better, and I must add, a kinder place. In the month gone by, we organized an online session on data privacy and protection, discussing the need for cybersecurity best practices in both personal and professional scenarios. We followed it up with a conversation with visually challenged industrialist Shrikant Bolla and actor par excellence Rajkumar Rao. Their individual journeys made us appreciate the strength in self-belief and persistence. Our freewheeling discussion on bilateral trade opportunities with the US Consular General, British Deputy High Commissioner, and Australian Trade and Investment Commissioner, and the opportunity to engage with their trade desks was highly appreciated, not only by our members, but also drew eyeballs of the press from across the country. Our startup and incubation vertical organized a masterclass on angel investing, which provided a comprehensive overview of this asset class, including the basics of how it works, the risks and rewards, and how to get started. We had 75 attendees at this workshop. As part of the Holistic Health series, our Women's Health vertical organized 2 talks for trainee nurses, where members Sharmili Chadha and Ashya Afsar were the speakers. I'm happy to inform that many of our members have come forward and pledged their time and expertise to the cause. The handlooms and health verticals came together to organize a health camp where women weavers of Siddipet and their families learned all about hydration and nutrition for a healthy summer. Free CBP tests were conducted for 41 women. Those with hemoglobin deficiencies have already received free supplements. Push notifications will be sent to them about taking the meds regularly via a dedicated WhatsApp group. Their levels will be checked again after 2 months to see the progress made. It brings me great pleasure to share with you all that we have launched a Center of Excellence for training women farmers in vegetable farming. Over the next 3 crop seasons, the COE will train 100 women in the best practices and techniques of cultivating, maintaining, and harvesting nearly 50 hybrid varieties of vegetables and greens. They will also be trained to be trainers themselves, ensuring an unbroken chain of self-sufficiency. East-West Knowledge Transfer Foundation is our implementation partner for this initiative by our Resilient Roots vertical. My thanks to Vision Tech for fully funding this project. An MSME workshop was organized recently at National Institute of MSME. Senior faculty from NIMSME apprised the gathering of 60 FLOW members about the various MSME schemes that can be availed by women entrepreneurs, the benefits of Udyam registration, and the bouquet of loans and banking services available for registered MSMEs. An Udyam registration drive was launched on the occasion, and 12 FLOW members and 10 non-FLOW members were helped in obtaining their registrations on the spot by our MSME help desk, which will now be available on all working days at the FLOW office in Banjara Hills for our members. In the next few weeks, look out for a tete-a-tete with luxury brand story craftsman and art investment strategist Arvind Vijay Mohan. MSME is a major thrust area for FLOW this year. I'm happy to share that through the unflagging efforts of FLOW Hyderabad's MSME SS cell, FLOW at the national level is entering into a knowledge exchange collaboration with NIMSME, the only of its kind central government institute that has been providing a pro-business environment to foster the progress of MSMEs for over 63 years now. The MOU for the same will be signed by FLOW National President Joyshri Das Verma and Director General NIMSME Dr. Glory Swarupa at our upcoming day-long MSME conclave on June 24th. Please mark this date in your calendar. And then there is the YFLOW event on the possibilities in the yet uncharted blue economy. Join us for Innovate to Elevate at IIM Ahmedabad. Embellish your business innovation skills through immersive on-campus programs and design thinking session. Secure your spot with an advance payment of 50,000 rupees. You would have all received an email yesterday about an international program on luxury brand management in Italy. There are just 12 seats and the last date to apply is tomorrow, so hurry. Dear members, hope you have all paid your annual fee. The final due date is 30th June, post which you will cease to get our updates on phone and mail. So do renew your membership at once. Hope you have started to familiarize yourself with the FLOW app. If not, please meet our office help desk, as we will soon be fully transitioning to it. We have just a handful of stalls left to fill in the weaves, gold and diamond jewelry, silver and gems, lifestyle and food court categories in Style Tattva 2024. Please contact the team if you or any of your friends are interested in booking a stall. And our promotions have gone live, so please like, share, follow, subscribe, and somebody just reminded me to say tag. Please tag Flow Hyderabad. Our social media campaigns on the occasion of general elections and International Plastic Free Day gained a lot of traction. Thank you to all those who engaged with us and look forward to many more doing it. Congratulations to the achievers of the month. Let's keep the Flow Hyderabad flag flying high. With that, I would like to thank our guest speakers of the day, Subrata Mitra, partner at Accel, and Shanti Mohan, founder and CEO at LetsVenture and Trika, prominent and highly respected figures in the Indian venture capital ecosystem. Venture capital funding is the lifeblood of innovation, propelling startups towards their dreams with the fuel they need to create, grow, and succeed. It's more than just money. It's a powerful blend of mentorship, strategic partnerships, and steadfast support that transforms bold ideas into groundbreaking realities. By sharing the risks and celebrating the rewards, venture capitalists, like our guests here, ignite the entrepreneurial spirit, driving technological advancements and economic growth. In a world where bold visions need a launchpad, venture capital is the catalyst that turns potential into progress, enabling visionary founders to shape the future. Let's hear from the best. I'll now hand over the mic to Ananda UVL, Head of Resilient Roots, our agriculture initiative, to introduce our guests.
Thank you. Good afternoon. I'm very honored to present the profiles of our distinguished guests of the day. May I now request Ms. Shanti Mohan to please grace the dais. Ms. Shanti Mohan is the founder and CEO of LetsVenture and Trika. LetsVenture is an online platform enabling angel investment in early stage startups that has facilitated more than 950 investments with a portfolio value of $11 billion. She's also the CEO of Trika, a growth stage and family office investment platform. Ms. Shanti is a nominated committee member, Alternative Investment Policy Advisory Committee of SEBI. She's also a member of the Karnataka Vision Board for Startups. With more than 25 years of professional experience under her belt, Ms. Shanti has personally invested in over 40 startups, including Trell, Sipli, Jiva, GoBillion, Goat Brands, Bima Plan, among others, through her early stage fund Propel. May I now request Mr. Subrata Mitra to please grace the dais as well. Mr. Subrata Mitra is an entrepreneur turned VC and joined Accel when Erasmic Venture Fund, a firm that is co-founded, rebranded to become a part of Accel in 2008. He was the first investor in Casa One, CureFit, Flipkart, JustPay, Moglix, Moneyview, MoSigma, Myntra, Scriptbox, Virident, Wibmo, and several other category leaders. Prior to Erasmic, Subrata was the managing director of India operations for Tavant Technologies Inc., before which he founded Firewhite Inc., which was acquired by Ubiquito Inc. and later merged into Mobile Planet. Mr. Subrata studied computer sciences at the Indian Institute of Technology at Kanpur and subsequently received his MS from UDEL and PhD from Urbana. May I request our chairperson, Ms. Priya Gazdar, to take the session forward. Thank you.
We are here, and Subrata was one of the first people I reached out to when I came to know that I would be taking over as chairperson, which was pretty late in the day, around, I think, November of last year. And he was kind enough to say, yes, I will come. And he was kind enough to even invite Shanti Mohan to join him here. I don't know whether he was kind enough or he was not brave enough to face 100 women in the room, but. So, Subrata, we'll start with you. Yes, that's for you.
Hello.
From unicorn to decacorn to now hectacorn, startup valuations are skyrocketing in recent times. So could you share the most ideal Indian example in your eyes where a simple idea evolved into a super successful venture-backed business?
It has actually happened all the time. We have probably at Accel invested in 400 companies. across those 15, 20 years. I would say there are probably 20 or so companies, maybe 22 companies now, which have become relatively large. That's a small percentage in terms of the 400 that we invested, but here are actually classical examples of companies that started with a very simple idea in all of these cases and managed to kind of go through the hurdles and growing pains of being there every day and create something really, really valuable, usually 8, 10, 12 years down the road. I mean, the classical example is Flipkart. When I first looked at them, they were actually delivering 30, 40 books in Bangalore. They had one office. It was like a 2-story building where there were like 6 or 7 people working at the company, the 2 founders and 4 or 5 others. The 4 or 5 others actually used to stay there in the ground floor of that house. And the top floor, which had 3 rooms, one was the software development room, the other was the logistics room where they would actually pack the books, and the third one was operations, where the guy would wait to run on their 2-wheelers to deliver the books, and they were only delivering in Koramangala and a few areas of Bangalore. In fact, I have taken a ride with Sachin in one of these instances where he actually personally delivered a book to somebody. And it was amazing, to see that that's where we started. And today I'm not involved with the company anymore. We have actually sold our position to Walmart. But I believe they probably do like 1 million orders a day today, right? So starting with 30, 40 to 1 million, it's been obviously compounding of some of the things that they do really well, and it has actually worked out thanks to the kind of quality that we created and the demand that we saw in India. So that's one classical example, but I have seen lots of these. So it's eminently possible.
So shall we continue and finish the Flipkart Walmart journey here?
Maybe let
Right? I think we are on that, so if you don't mind.
Oh,
All
sure.
yours. So this is a very interesting story. We need to know how you made globally the biggest e-commerce deal till date.
When you start, it is 6 people, of which these 2 founders, they had both worked at Amazon before, so they had some idea of how e-commerce works globally. It was too early for India. So they were good, computer science background, software people. So going in, my assumption was that they will be really good at the software aspect of it, but there is still this other aspect of creating demand, creating supply, which is, initially it was just the books, and then later on electronics, and now almost every category that you can think of. But those would be challenges. But to my surprise, they actually outdid what my expectation of the 2 people were, and they continued to hire really, really great next level people. So I would say when we were like 100 people strong team, almost everybody was entrepreneurial and were young, but super enthusiastic about what we were trying to build. So that was the catalyst, that you have this simple idea of delivering books, you do it really well. We cracked what is called search engine optimization. So anybody searching for a book in India would actually see Flipkart first on almost any title. And then we created this wow moment where we used to have recycled brown paper bags in which we would put the books in. And a lot of people started talking about it. So they loved the fact that this was recycled paper that we were using to package the books. And slowly, all of these started kind of creating this nice positive cycle where more people were hearing about us, more people were ordering, and then we moved from being a single city to multiple cities, single category to multiple categories. And then, of course, at some point, Amazon started competing, which became a nightmare for a while. And then, luckily for us, we had good amount of investor capital coming in after us. And that helped. And then eventually, Walmart decided that they wanted to make a big splash in India. And this was probably the only real opportunity that they could sink their teeth into for their kind of size.
What role did you particularly play in all this?
Lots of small things, you know. So initially it was just going and sitting with these two guys and trying to understand what they're trying to build and be a sort of an outside-in validator of some of the ideas. Because, you know, internally what they were doing, but they were coming and explaining to me, this is the customer pain point that I'm trying to solve. And obviously, you know, we were a consumer of their books, and so were other people in the office. And then I had friends who used them, so I would be able to give them a little bit of advice saying, you know, yesterday a friend of mine tried to return a book, and it is still painful. So they would say, okay, you know, for this one, you give me the name of the guy, I'll actually call the person and tell them that this is a one-off, so I'll make sure that this will get fixed. And then 1 month later, I would never hear about that problem anymore. So these two guys were so dedicated to make sure that that customer-first approach, that anything that gets in the way as a friction to buying books or later on anything else from Flipkart, that needs to be taken care of. And some of you might remember, we used to have these large sales, which were called Big Billion Days. They still have it. Our second Big Billion Day was actually a disaster. You know, we kind of did not expect the amount of demand that we would get. Starting with our software systems to our delivery, everything crashed. And Sachin, who was the CEO, actually came to Twitter and apologized, saying that, you know, this is not how I want to run my company. I would expect that we would have done a better job, but, you know, as our customers, we feel really bad that you had to go through this pain, and I'll make sure it never happens again. So that kind of humility to accept that there was a problem, and accept at a global stage. I mean, he went to Twitter and did this. I found was amazing for, he was probably like 29 years old at that time. So to get that understanding that we are here to serve our customers, and if they ever have a pain point, we don't need to exist. That was kind of grilled within his brains very early in his evolution, and he would help others understand that. So I think those aspects of it were probably places where we kind of interacted, then, you know, hiring the right set of people, and then luckily for us, very quickly, Tiger Global came in and invested. They brought in a lot of very nice understanding of global e-commerce, because they were big investors in China of similar kind of companies. There's this company called JD in China, which is very, very large. I forget how big it is now. It is probably, you know, 4 or 5x the size of Flipkart. They were early investors there. So a lot of the learnings, we actually went to China. We sat with the JD guys. We tried to see what kind of issues they started seeing at scale, and how that might translate to India, given how bad logistics was. So in India, the great part of it is we are building multiple companies inside that one company. You know, we had eCart, which is this last mile logistics company, which is huge now. Probably half of our million orders a day is supplied by eCart. We were building a payments company, which has turned out to be PhonePe. We had multiple failed attempts, and then finally PhonePe worked. We had a bunch of people working on how to use these mobile phones very effectively to order stuff before the app-dominated world started. So when people started to move from web to mobile web, there were a lot of challenges because of the form factor, as well as the sort of the quality of the early devices. So how do you make their experience better? So we actually had a technology group that was actually working with Google, because most of the phones in India were Android phones at that point. So how do we create a very lightweight kind of app kind of experience? But it was called, something web apps. I forget what the first name was. But it was actually unique that for all of Google, we were probably the largest user of that web app technology, and we kind of did almost a groundbreaking set of work for that. So there were these little things that were being built within a company, within a large company. There were these smaller things. And then, of course, we went and acquired Myntra. That became a company and a soul of its own. So that had to be nourished separately, because the kind of customers that were coming to Myntra happened to be very different from the people who were buying from Flipkart. Like my wife, even today, probably 2 times a week is buying from Myntra. She never goes to Flipkart. I'm sure a lot of you are like that. So it's a different category of customers that you're dealing with, so their needs and wants are different, so you actually have to have a different kind of experience dealing with that. So all of these little things kept getting built up within this larger organization, and in the end, it is the right people at the right place at the right time, right? So how do you ensure that? And we have made our mistakes. You probably have heard of people who came from global companies to be second-level managers at Flipkart and didn't work out. That created a lot of turmoil internally. We actually, 2016, 2017 was really tough. The entire board, we had to step back, look at what was happening. We brought in this guy, Kalyan, who's currently the CEO of the company, to actually head, because we felt like his strengths of having worked for eBay in Singapore was actually going to be quite valuable. And just doing it grounds up the way Sachin and Binny were doing would not suffice. So that was actually a great, looking back, a great decision. So a lot of these things we were involved, initially at a very micro level, and then slightly later on at a macro level. The other thing that was massive, and we never talk about it, is we used to have almost 1 to 2% of pilferage in Flipkart. These are people working for us in these warehouses, and they would walk away with a small cell phone, right? How do you counter this without really making employees feel bad? What are the kinds of systems and processes that you need to set up? So we actually spent a lot of energy at the board level to triangulate and figure out what is the right level of intervention that we need. We obviously, if you're doing 1 million orders a day, you can't have 1% pilferage. So how do you reduce that and yet make sure that it's a great environment for employees to work at? Likewise, 50-60% of our orders are on cash, even today. So there are people who are handling that much amount of, so let's say average order value is about 1,000 rupees, actually a little more than that. So 1 million into 1,000, that much, and 60% of that is cash, right? So there are people whose salaries are probably less than the cash that they're carrying. How do you make sure that they do the right things? So how do you set up those processes? So there were a lot of these small things that have happened, and the culmination of that was this large, thing that Walmart wanted to do with us.
And congratulations on that.
Thank you.
And may you top this with another globally big deal. And I must confess here that it took a demonetization for me to shift to credit card.
Okay.
And it took me losing a credit card to shift to PhonePe. And I'm so happy with PhonePe. Thank you so much.
Oh, okay, sure. So that was our attempt 3 at building payments at Flipkart.
So we've seen so many pearls going to make the string as long as sturdy as it is today.
And this is like 12 years of my experience, into 12 minutes, right?
So Shanti, when I looked you up, when Subrata said that Shanti will be very good on the stage with him, and I really believe it is so, because what I read really influenced me into thinking very differently. And Google's summary for LetsVenture says, connect with 10,000 plus angel investors, raise funding seamlessly, find startups to invest in. So can you tell us more about what you do at LetsVenture and what got you started in the first place?
So thank you for having me, and I'm actually very captivated by Subrata's story also. It's like a lot of learning, just listening to how large companies scale. But LetsVenture, when I came back from the US, and I had actually done a startup earlier, and then I had worked in HP, and I thought I have already done a startup, I've done a corporate, so now I have experienced everything. So now it's time to do a non-profit. And I actually went and worked with a non-profit where I realized that I could bring in fundraise as a support to that non-profit. So that's how I started. And I started reaching out to a lot of my own network, people in the US, people in India. And I realized that I was repeating the same story every time I would meet someone, right? And of course, I went back to HP. There were people in my team who just wrote a check because they said, if it's you running it, we're happy to support it. But I realized that it has to be scalable, because it is exhausting after a point in time to consistently say the same thing to multiple people. It was not an efficient way of fundraising. And that's how I thought that I should build a platform for non-profits to raise capital. And at that point of time, crowdfunding was a very big phenomenon. MOOC was a large phenomenon. And in fact, met with a friend and he said, why do you want to do non-profits? You should support incubators and accelerators raise funding, because that's the low-hanging fruit. And of course, I had a lot of founder friends who actually had started companies and who were struggling to raise capital. So I think it was a very simple vision of saying that how can you create efficiency, and how can you allow the founder to meet the right investor, and how can you help the investor discover the right startup he wants to invest in. So very, very, very simple way to approach a problem, right? Because we knew that that was a real problem to be solved. Of course, this was earlier than PhonePe and Paytm days and all of that, right? So everybody's like, why would somebody write 5 lakhs online to a company? That is one. Second is, and I think which continues to be true, is that we are a very low trust society. I think trust deficit is there everywhere, right? People don't trust people easily, and I don't know why that continues to be the way it is. Like, you'd make one mistake, even now at LetsVenture, there is one delay in portfolio, or we have missed some information to an investor, and the investor would certainly copy me, send a stinker email and say, I'm sure you have colluded with the founder to do this. I'm like, I have like 500 companies here. I mean,
Are we sending a recording to the investor?
yeah, serious. No, but it is like, people are always, like, moment something goes wrong, I think people immediately mistrust and they think, I'm sure you have an ulterior motive on why you would do this, right? And I think that is...
And just for information, I'm actually on the board of Shanti's company.
Yes.
So I pull her leg all the time, but I'll come back and tell you what got me to invest in her company.
Yes. No, but this is a very... So at that point of time, I honestly did not realize that we were getting into a very complex market, which was managing people's money. We started with a very idealistic vision of saying, how can I support the founder, right? We never actually thought, how can I help investors make money? Honestly, that came as an afterthought of finding the best founders, because in our mind, we thought if you find the best founder, people are going to make money, right? But how do I go get the best founder? And how do I help him raise capital in a way that it is very easy for him to raise capital, right? And that's how we actually launched a tech-first platform, right? Our first deal happened on the platform. We raised about 1.5 crores. So we launched our platform in September 2013. And January 2014, we had closed a 1.5 crore deal. We had about 7 investors from the US who had invested into the founder, who had not met him, who had just met him online. So all those points of validation happened as we started to build LetsVenture. So, of course, today it has become a very, very different organization, because today people look at us as their financial kind of almost their partner when they look at private market investing. So we in fact changed our tagline from startup funding made easy to angel investing made easy to now private market investing made easy. Right? So there has been a lot of transition. And I think it has been challenging, again, because of the fact that we are managing capital, right? And I'm not managing capital, and that's the challenge, actually, right? I'm actually helping them find the right asset to invest in without managing the capital. And that becomes a little bit of a challenging position to maintain constantly.
So just on that piece of people from abroad investing,
Yes.
Are these generally NRIs or, absolute foreigners?
So yeah, we have been actually very, very fortunate. So from the time I have started LetsVenture, we never spent money on marketing. Because what we realized that even in India, people had money, they didn't just understand how to invest. So we did a lot of angel investing workshops. And it's very interesting, the press would write about it, because this is like so strange. In 2014, somebody talking about angel investing. Today, I think we see a lot more of that. And thanks to our friends in ET and TOI and CNBC, they've been very, very kind. They've written a lot about us. And a lot of the Indians, and you'll be surprised how connected a foreign Indian is to India. Like on their top apps will be ET Online, right? It will be TOI. So they're constantly tracking India stories, right? And that's how we would get found. And a lot of international investors came into India. I think the last 5 years that has accelerated because the India growth story has grown so much. And I also personally believe that if you don't invest in India today, you would have missed investing like how you would have missed if you didn't enter China in 2001, right? We are the largest economy. We are the fastest growing. I think we are going to prove that the next 10 years belongs to the Indian founder, right? And I think the quality of Indian founders has gone up. I think everything is really working from a private market entrepreneurship perspective, right? We see a lot of very, very good founders putting in their entire life saving, right? Putting in a lot more capital than what people had put in about 10, 15 years back. I think the stakes have gone higher even for founders today, right? And I think it's a great opportunity for an international investor to enter. We have a lot of CXOs in Goldman Sachs, Morgan Stanley, you know, all the big fours, like all the large US, Google, Apple, you know, you name it. Everybody is investing through our platform. So 40% of my investors are international investors. 40% of them are tech guys, you know, director levels, right? And director level, you can easily put 5 to 10 lakhs in an Indian startup, right? So you start getting exposure. And I think they have a FOMO to the India market, right? Because they realize that if you don't diversify, you are going to miss the opportunity that is one. And I think somewhere, I think they want to feel connected to what is happening in India, right? And this is a great way to feel that, you know, understand where is the next big entrepreneurship idea coming, where is the next big innovation happening. I think there's no other way to understand it than to write a small check in companies.
So does the water flow the other side too? I mean, in the other direction too? As in, do foreign founders find Indian investors through your channel? Is that happening at all?
Yeah, so, you know, interestingly, we have a lot of companies. I mean, anybody can come and apply on LetsVenture. So we don't have a restriction on geography. We have about 30% Singapore companies, US companies, companies from Nigeria, companies from everywhere. Founders, and Subrata will know this, founders have an uncanny way of just finding where the money is, right? So they will flow, they will find it, and they'll come to you. That does not necessarily mean that an investor can invest because of regulatory problems, right? We have LRS, because of which you can't easily invest outside India. And it becomes very, very challenging, right? Just the fact that you can only invest 250K outside India, which includes your credit card spends, which includes your child's education, then you have hardly any money to invest outside, right? And that is actually the biggest hurdle for Indian investors to invest into foreign companies.
So is it like we don't want to drain our money into foreign
I don't know if it is. I think it is just the way the government is defining.
So I was wondering if the government doesn't want Indian money to go into foreign shores.
Yeah, I mean, obviously Indian rupee is not fully convertible. So, and this is, whenever we get into a adverse, dollar ratio, these numbers, which is 250, has actually been brought down at a day's notice. You know, I think last time when Chidambaram was finance minister, so I think they brought it down to 125. And for us, particularly, it's very hard because Accel is a global entity. So we have to put our partners' capital in those global entities, which means we have to buy dollars. So, we can't even put our partner money, whatever we have pledged to the fund. But that's a different problem, but that's associated with how strict India is on liquidity of foreign exchange.
But taking off on what you said, at our last meeting, Consular General of US actually said it is the century of India. So that was headlined, and she said, like you said, that it is India, and if you don't invest in India, there's a FOMO across the world. So whoever is looking at, we had this masterclass on angel investing. So
30 seconds on LetsVenture from my perspective.
Yes.
So, before I did Erasmic, which you guys heard about, we had actually, my partner Prashant and I, we had invested in 5 startups as angels. And the one that stood out is Mu Sigma. We actually had this kind of an angel club. So there was Prashant and I who were tracking down companies and making our personal investments. And we have almost like 10 to 20 friends in the US, people in the Valley that I had worked with. They would say, if you're doing something, I also want to put $25,000. Okay, so this is the free riders, all right? So the free riders would come on and tell us, if you find something interesting, let us know, we want to invest. So each of these was becoming a little bit of a challenge. So now, you talk to these 10 guys, and they will all have an opinion. So we were almost thinking, is there a painless way of doing this? And that in some ways was LetsVenture. Right, so when she walked in through the door, one was the team that she had, and then this concept that this angel investing will actually become not more ubiquitous in India, and here is a platform that enables you to do that. And there is an equivalent platform in the US, but that doesn't really work in India because of all the subtle regulatory issues that company formation and bringing in foreign exchange, repatriating, all of these are very subtle for India. So you need almost like an Indian platform to do it. So that was one part of it, and we got in and we wrote the first check. But what I came to know since is Shanti is a force of nature. So things can go wrong. She'll be back home at midnight, and next morning she'll be like going off to Hyderabad at 5 in the morning, right? And you call her, okay, I'll call you back in half an hour. I'm just catching a flight. So that is the kind of spirit that she brings, and she doesn't need to do it. I mean, they are independently very wealthy. I actually know her husband before I knew her, and Mohan has done a great job being in Motorola and then running some funds and all of that. So they don't need to do it. But this is the passion that she brings to the table, which I truly admire, over the, 10, 12 years that we have been associated.
Yes.
And it just goes on. So that's the beauty of being an entrepreneur in India. You never know how many challenges you're going to face, but you have to be up to it every second, every day, every minute, right? So, and that, she epitomizes that.
Yeah. Thank you for that.
And this is for both of you for making us so proud. And so moving on to something a little more serious. What qualities should founders focus on while building their initial team? And how important are the roles of culture and leadership in the early stages of a startup?
So I kind of, would say that culture and leadership is super important every day of the life of the company. Doesn't matter whether you're a startup, you are, running an organization in Tata or whatever else you're doing, right? So that's a given. You need it. Short of which you'll create something which is a hodgepodge, right? So that's a given. But early employees are, truly fundamental pillars of your company. So one is, there are two aspects to it. One is like the subject matter expertise, and the other is this team formation. And both are equally important, and sometimes we miss one for the other. We try to put too much weightage on, let's say, subject matter, and then we forget the team aspect of it, and that comes back and bites us. On the other hand, we could be very, very team-focused and forget subject matter. That will also create some challenges. So it has to be a well-balanced sort of, equation between subject matter expertise. So, let's say you're building an online company, you need to know how to do online marketing. You need to figure out, how you're going to sell your product sitting in Timbuktu or product or service or whatever it is, right? For that, one person in that founding team has to be super good at either already knowing that answer or being able to figure it out because things are evolving so quickly. So that learnability quotient has to be high, and then their ability to grasp that subject has to be high. Now, at the same time, if you're building that same online company, the product has to be really good, because you will not have people showing up at the doorsteps of your customers to explain the product. They have to be able to either download it or experience it online. So how good or how intuitive is the product becomes very, very important. Therefore, the guy who's building the product in that company has to be able to understand what is our customers going to look for. And are we like in the 98th percentile or 95th percentile of that category of products? Then, in the end, there has to be a good CEO for the company, because each of these departments are going to run around and do their thing, but somebody has to pull it all in and say, here is our vision. We have, we could solve 15 problems, but these are the 3 that are really worthwhile because of all the customer surveys that we have done, and we think that there is a really large business that we can solve just by solving these 3 things. So don't focus on the other 12, let's build the 3. So that, and then everybody else has to be able to say that, oh, I don't agree, but because you're saying it and you are the leader, I'll actually go with it. So disagree and commit, which you probably hear about all the time. That's really, really important in that first core team, and that can only happen when the trust factor is very high, right? So having trust, having that equation within the team, and then having capabilities to execute what you want to execute, both are equally important in the early stages. And generally, you'll not be able to hire these guys because you don't have enough money. So you need to kind of be able to siphon through your Rolodex and find them. The first 6, 7, 10 people that you hire has to be people who trust you and willing to jump off the cliff because you're jumping off the cliff.
Absolutely. I think that's what especially startup founders need, right? Yeah.
And Erasmic was a startup fund. So Prashant and I, we were going in one direction, and one day we said, no, that's not the right direction, let's jump this way. And then Mahendran also said, okay, we'll jump this way, right? So you have to have that ability to, between yourselves, be able to get convinced that that's the right direction, and everybody pull in that direction. So once you made the decision, you can't go back and say, no, that other thing would have been better, right? That's gone, that time has come and passed. So that is very important.
So here I wanted to add one thing to what Subrata said. So I actually met with a listed founder, and he said, the formula I follow is Vyawar pehle, Vyapar baad mein. He said however valuable the person is, if he's toxic to your culture, he is not valuable to you, right? So he said you should always use that as a parameter. That, like what Subrata said, I think that attitude of just saying, I trust and I will work to make this successful is probably the most important thing. And a lot of times we get somewhere in our mind blackmailed by people who are really good, but who could actually start creating toxicity because they just feel that they are bigger than the organization.
Yeah,
right?
most of us, I think, have faced this at some point or the other.
That is the reason why I bring this up, because I think it somewhere might happen more with women founders, because I think somewhere you have to constantly be putting yourself and saying, look, this is not acceptable. And somewhere as individuals, we don't tend to do that. We want to be a little kinder in our conversations, and then kindness is construed to be something else. Weakness, right? And that's why I thought that was the most beautiful way to explain it, saying, Vyawar pehle, Vyapar baad mein.
So from what Subrata was saying earlier, that they pivoted. So tell me, on an online platform, if somebody has invested in a startup and the startup suddenly decides to pivot, what happens? What is the investor reaction to it?
I have realized, I think the early years, a lot of founders pivoted, right? And I think investors were a lot more patient. What I've started to see, and that could just become that the first probably 2,000 investors were people we also somewhere connected to, we knew as the scale started building, we also were in the pressure to bring more capital to the platform, to make the platform more liquid, right? And I think there are always instances of people who will say that, there is something going wrong here, why is he pivoting, maine us idea pe paisa nahi dala tha, maine is idea pe, I think people start questioning the whole thing, which becomes very stressful for the founder. That is one. So I tell the founders, sometimes you don't have to, unless it's a huge pivot, like you're moving out of a sector and moving to a new sector, just keep doing it, because I think your metrics will actually make people forget that you pivoted, right? So I think you ask for forgiveness than permission, and just keep building, because that's how you have to be as a founder. And I'm not saying do this on things which are ethically wrong. I'm not even promoting that. But I have always believed that you ask for forgiveness later, but go test it, because as a founder, you're the only one who knows what works, what doesn't work. And you actually know why you're doing some things. of course, you have to go to your board and, you know, you have to talk to other people, get perspectives before you do the complete pivot, which I'm expecting founders would do that homework. On the flip side, I'm also seeing founders today, and that is a phenomenon I'm seeing in the last 2-3 years. When they try to drop an idea and they're pivoting and they know this idea is much bigger than the other idea, they are also not playing it fair to people who've invested early on. I'm seeing a lot of that. They are like, now I want to create a new company. Now I want to move all the people from this company to that company, but I'm going to give them a very small share. I think that greed of pushing people out, once you think that you're getting successful, I think that is a behavior which I've started to see. So I'm giving you perspectives on both sides. So it's not like only the investor is wrong when he's not accepting it. It's also that when the founder sees a much bigger idea, he doesn't want the investors anymore.
Right. Or is he looking for new investors?
No, he is looking, but somewhere he feels like, now I don't want you guys. I'm actually seeing that a lot among founders, and that's surprising me nowadays. So we actually now go back and fight. We said, no, you have to respect the fact that the investor has come in, right? So we are always trying to balance both sides, and this is all about ethical intention, right? And that is very hard to articulate or very hard to measure. And that happens when you start seeing scale, right? You'll start seeing these behaviors.
And maybe one thing is, even on an online platform like LetsVenture, there are usually 1 or 2 lead investors in a company.
Yes.
So let's say in their case, you know, Sharad Sharma, who's like fairly well known, if he is in a company, then maybe the founder should just go talk to him and
Yes.
explain to that lead investor
Yes.
the rationale for having this pivot. And then he can actually go talk to the other investors, and generally people will probably go with his impression of it. So there is a way to tackle it, because some people are completely attuned to the fact that startups are not a straight line journey. There'll be lots of ups and downs. But on the long run, it has to be up and towards the right. But in between, I mean, it's like if you look at the stock market, any particular company, even NVIDIA, you look at it, keeps doing like this, and then it goes like that. So I think people understand that, but sometimes there may be this lack of communication, lack of trust,
Absolutely.
which might get in the way, right? So why didn't you tell me? I mean, I put my money in, so you should have told me. And that's where I think founders can be, maybe they didn't have the time, which is perfectly fine because they're running to solve other important problems. But at some point they should just, step back and say, I had 10 investors, maybe I've informed one, and let me check if he has talked to the other 9 or not. If not, I should probably, let them know.
Okay, so to let them go, there is something like an exit strategy, right?
Let them know
Let
that
them
I'm
know,
changing,
okay,
yeah.
Okay. Okay, so even like she said, they don't want the investor anymore in their company or to
Even
be
that
associated
happens,
with them.
but maybe I've been in the industry too long. So if people don't want me, I just walk away. Whatever.
No, so when you walk away, what is it that you take? Because that is already that's
you-
already set down on the papers, right? So
you just sell your shares to the founder for $1, walk away.
but how does that work for an investor then?
No, because you are doing a portfolio, right? Here is a stressful situation where you can fight that founder, and in the end, probably he'll kind of do something. If they really want to do whatever they are wanting to do, they'll probably get on the wrong side of the equation anyway, right? And you'd spend some amount of legal time and your time thinking through it. So I personally, I feel like whenever this goes sour, that the founder doesn't want me and they have pivoted, they want to do something else. So, okay, bad money, bad time, let's just call it off. You go do whatever you want.
No, but that's because you invest, you have a very diversified portfolio. And
That's also because Subrata
but
is
how
also
about
very
there's only 1 or 2?
Most angel investors will actually diversify.
Yes. Yes.
Even on their platform. I mean, on an average, people are putting money into what, 4, 5, 6.
Oh,
companies.
more than that, yeah.
But
maybe 10.
if they've just started with whatever they've saved and all, so they can't take this risk, right?
See, let's talk about that. If that is your saving, this is a bad business to be
Bad
in.
asset to be in.
Okay, you don't want to start by putting 100% of your money into startup companies.
Right.
90% of the startups anyway fail.
So we always tell people, if you can write a check and forget about it, only then you should angel invest. It has to be play money. You cannot use it and say with the returns of the money, I'm going to send my child to university. Nahi, yaar, ab mat karo ye. You know, that is not the way you have to look at, like Subrata said, it's a very, very, very high risk.
Put that money in Nifty, that'll do a lot better.
Right. So, so tell us a little about what are the different kinds of exit strategies that are available.
See, generally 2 or 3 types are very common. One is M&A, which is, let's say, what happened in the case of Flipkart and Walmart. They did a gradual M&A, so they got, I think, 80% upfront, and now they own almost 85-86% of the company. And I think might have to do with some restriction of SEC and all of that. So they can't own 100%, something like that is there. The other one, which is the classical one, is to take a company IPO. And depending on the jurisdiction, it could be an IPO in US or in India or maybe in some other country as well. But we generally know a lot more about India and US. So we would probably kind of try to steer a company in that direction. And the third one, which we have been lucky, which is early stage investors. If you have a really good company, and let's say the company doesn't want to raise money. I mean, it happened to me in Musigma so many times. The company became profitable. So company had no need to raise money. But here you were holding a lot of shares which other people found valuable. So you can sell your shares to another investor. And obviously you do it with the permission of the company and all that. So in our case, we actually sold to General Atlantic shares of Musigma when they wanted to acquire, and we said, okay, we want to diversify. It was like a lot of capital in one company based on value. So we want to take some out of this and kind of diversify into other investments. So we actually did that. So I would say these are the 3 general approaches, and then there could be nuances in between.
So are there instances where the companies want to buy back the shares and stay private?
Yeah. I mean, even this, it could be company buyback or it could be a third investor buying it. So it could be either way.
And Shanti, on your extensive platform, what have you seen, like between raising or deploying capital, between managing capital, which is tough and why?
Deploying capital is always easy, because a lot of people want capital in the sense, right? But of course, deploying capital is not as easy because you still have to find the right company. I think deploying capital and raising capital is just 20-30% of the work. After that, it's about working with portfolio companies, ensuring you're returning the capital. That's exactly what I said. Like when I started, I had built a platform to help founders, but I realized that the liquidity side, because we were working with investors, we now have a complete portfolio team. We have an exit team where we are constantly talking to founders to say, do you want to exit? And it's a very interesting dichotomy because investors keep asking for exit. Every time there's a company which comes for exit, they're like, no, now we don't want to exit because now I think my money is going to multiply more, right? So that I think that ability to say that 4x is good for me, let me exit and then circulate the money, I think that is still people are learning. And I think we have see, what I've realized is that we are in the business of working with people in any business, right? And you have to work through the human psychology of how people think and how people think of money, right? And that has only started to sink into me maybe in the last 3 years, right? When I've started seeing very different behavior evolve when people lose money. I think you see the real behavior when people start losing money. When everything is going good, everybody's happy, right? So I think both sides are difficult. It has its unique set of challenges. And we are in that position where we are managing both sides. So I wouldn't say one side is easier than the other, honestly. And I don't know if this is if you think it's a diplomatic answer, but honestly, there is no easy side because each of it is very nuanced. And you cannot take your eyes off on either side, right? Because even on the founder side, you have to get the best founders and they always have more capital than what they need. right? So I
think
have to
that's
always.
when they want to invest also, right?
Yes, so always I have to pick up the phone and tell मुझे थोड़ा allocation दे दो, and he'll say ठीक है आप मांग रहे हो तो मैं दे देता हूँ, right? Like, but I have to get involved then. Then it doesn't make it scalable, right? But still you have to be a little bit in touch with people. You can't completely say that okay, it'll run on its own. Similarly, on the investor side, like while there's a lot of liquidity coming, you have to always keep a watch, because my team is like, they face the brickbat, right? Investors calling up, shouting at them, and then they'll call me up and say, "Itna gali de raha hai investor." Matlab, we have not done anything, because we don't advise them on investments. We are only offering an opportunity to invest.
So the due diligence and all is done by them.
No, no, no. We do everything. We do all of that. But my team will never pick up the phone and say, "Is startup mein paisa likho." We will show you all the opportunities. It's after that, it's for you to decide. But I think when things go wrong, people forget how they decided, which I think is okay. That's why I said both sides has its very unique set of challenges. And that's why this business is so complex and needs always involvement. You can't let go of things, because you suddenly start seeing the impact on the business.
But being risk averse won't work, right? When you're a venture capitalist or an angel investor.
You know, in certain situations, let's say a little bit more PE-ish, investors, it works, because let's say you're looking, let's say you're looking at India, you saw a bunch of companies in public markets are doing well, they're growing, and now here comes a technology-driven younger company in the same space, and they're already profitable, could be a fairly safe company. And that's what within the, let's say the investor parlance, we call it as a growth investment. So you are now really putting in money so that the company can grow faster. So it has a proven business model, it has enough customers, it is probably churning out a little bit of profits, but the profits itself are not large enough for them to grow fast. So now you're putting in money for the company to grow faster. So in those situations, you get a lesser gain, but you're probably reasonably downward protected, because the company is already profitable. Unless that category goes away for some reason, Gen AI comes and wipes out XYZ. Let's say, English learning over the internet became a passe because all these language models are. If something that drastic doesn't happen, you'll probably make some money there. But in general, if you're starting early, it has to be fairly risky, and therefore you make the gains.
So percentage-wise, what would you say? People prefer to invest at the startup stage or during the growth phase?
I think it's all different for different people. Even within Accel, we have 8 partners. And I'd say our DNAs are very, very different. And Shanti knows some of us. I couldn't care less about a company which has 20 million in revenues and already profitable. It's a boring space for me to invest. I would love to get in, at an idea stage and be able to iterate with the founders and find of all the 5 or 15 possibilities, which are the 2 that we should do. And if one of those actually work out, then I said, okay, job well done. Okay, that's me. But my partner Prashant, for example, and he's done well as well, he would go find, let's say, a brand where there are, it's India, expanding market, consumer spend is increasing, so brands will do well as long as they're well executed. So he will try to find 1 or 2 of those and come in at, let's say, 100 crore revenue and grow it to 1,000 crores. Right? So within the firm itself, there are different kinds of DNA. And I wouldn't say anything is right, anything is wrong. So it just depends on what you want to do.
So most of the brands that you have invested in, let's say, of course, Flipkart, Ola, Book My Show, Myntra, Freshdesk, Swiggy, all of these have, gone on to become category defining brands. So what is that particular ESP that you and your team possess that is making you invest in all these marquee brands?
So the simplest thing is, you missed that point, right? 400 companies, of which 22 are here. So maybe we are just throwing darts back in our offices, okay? So don't take out that possibility. So we sometimes throw darts. But I think the thing that we at Accel want to do is align with the best founders. And what is a best founder? Obviously they have to have identified a space, maybe not that specific idea, And Mukesh at Myntra, he pivoted. This is like, Myntra was like the third or fourth idea that actually worked. But they've identified a space that we think is really going to grow. And within that space, this guy has some unique capabilities of creating a company that will be better than other people who identify the same space, right? So at least these two things, if we can get a good handle on, then we would be relatively more inclined to go for it, right? Great founder and hopefully a great space. And we make mistakes on both, which is why those numbers are small.
But these 22 make up for all the other
It definitely does.
378.
The way we invest is, and I'm sure even angel investors look at it the same way. Let's say we have 100 million to invest. We actually will take 25 or 30 million and find 25 or 30 companies and put 1 million each. Mm-hmm. So that's the highest risk money.
Okay.
Now, maybe we feel like out of the 25, 10 of them have gotten to a stage where the founders are as good as we thought they were, the space is actually maturing and not that much of competition. So those 10, maybe we'll put another 2 million each. So the next 20 million goes in proving out a subset of these companies. And then the remaining 50 will go to the really outstanding ones out of these 10. So we also, therefore, hopefully our loss ratios are large, but the lost dollars are not that large. Because, these early stage ones are the ones that are most risky and therefore highest loss ratios. But the amount of money that you lose may not necessarily be in the ratio of the number of companies. So which is why that non-linearity kicks in at some point. And if, let's say 2 out of the 25 do really well, you would make, 5x on the whole fund.
So I
just want to add
explain.
one thing to what Subrata said on Accel. I think which is not, Subrata can't say it, but I'm going to tell it for Accel, that, investing is actually plays a lot on just good karma. And I'll tell you why. You are good to founders, right? You get access to the best founders in the next round because they refer founders back. And I think founder NPS, I call it, is very, very important when it comes to investing. I know a lot of funds where a very good founder struggling to raise capital, but he will not go to that particular fund. He'll say, nahi, mujhe nahi lena unse paisa. Right? And over time, that just getting access to some of the best founders just plays out. And I have known Accel and Subrata for the last 10 years, probably the highest ethical and highest, strongest fund in terms of supporting founders, right? They will not go and...
Thank you.
Yeah, they will not invest in competing founders. They won't play that game at all. They will rather stay away. But, that is what gives you access to... Like, they are kind of branded as the best capital you can raise in the country today, right? And you can actually see it in track record in terms of governance, in terms of companies which have come out. And I think all that is very, again, it's a small kind of ecosystem, right? And people know.
So pivoting a little from there, how many investors on your platform are women? And on the other side, how many founders are women? And if there is a gap, why is it there? And what do you think will happen, in the near future? Is that going to at least close a little bit?
Yeah. So actually about 2-3 years back, I think, and this happens every time, I think most of us experience it, just before Women's Day, everybody will reach out to you, mujhe quote do women pe, let's go and talk about challenges of women. Like this is literally happening every year before March 8th, it will start, right? March 1st onwards, you'll start getting those emails. And I remember once CNBC did this and I told Shireen, why do we do this at every Women's Day? Sit and talk about problems of women and then how many women investors, how can we solve the challenge? Next day, everybody forgets, everybody goes back into talking about mainstream challenges again, right? And that year is when we decided, okay, you know what, let's stop getting on to any of these media channels. We'll go and try to solve the problem. And then we looked at our platform, and this was, I think, about 3 years back. We had about probably 11,000 investors. You won't believe it, the number of women. Can you take a guess? 70%. Sorry? 70% women? No. No. So don't even talk about percentages. Just Just give me a number. Out of 10,000 investors, how many do you think were women? We are all being very optimistic. There were 25 women on the platform. Yeah, so that's when we said, there's something wrong here, right? And then we started this program called WIN, which is Women in Investing. And my belief is always that if you want to solve for something, you can solve for it. When you put focus on any problem, the problem gets solved. But the thing is about putting focus on the problem. So we said, okay, now let's put the highlight on women in investing, and you will not believe it, insane profiles of women, like CFO of, like Lamborghini. Like, it is crazy, like the kinds of people who came into that program. And then today, and that 1 year, we added 250 women onto the platform.
Wow.
And out of that, almost 120 women invested. That's because every time we would run an angel investing class, people will think, yaar, mujhe nahi jana, because I might ask very basic questions. For some reason, I think we always want to be prepared, we want to sound intelligent, like when you go into a conversation. And this really helped us. So we ran almost like 3-4 cohorts. Of course, today we have 2 WhatsApp groups, right? And a lot of women, and I told women that you should not be investing only in women founders. You should invest in the best deals, because I don't want you guys to lose money. And I'm not saying that you will lose money if you invest in a woman founder. But don't make that as a filter criteria. You should just say, and if that woman happens to be the best founder, invest into her. So that is the first. Second is, if you look at my women founders, I think it has changed over the last 5 years. Very, very ambitious, very, very inspiring, right? Young women who really want to go build categories. And I think Accel has a lot of very good, like ACO.
I mean,
right?
reasonable numbers, but I wouldn't still say.
Of course.
Yeah,
No, the percentage.
I don't want to give you the numbers yet.
No, but the percentage on our platform in early stage is about probably 18%, right? So 15 to 18% of people who come to the platform to raise. But finally, what is raised, I actually have not tried to track, because we don't ask gender on our platform. That's the problem. So I have to look at every profile and then map and see who is a woman founder there, right? So that's the reason why I don't have the data, because we've not actively tracked the woman data on the platform.
So do you think for an investor it matters? Does gender matter?
I think, and I don't know, I think it starts to matter after a point in time, and it depends on, how much, I don't know. I think it is harder as a woman, I would say. Sometimes, right?
For an investor, suppose he likes a product,
No.
in the final analysis,
No.
will her being a woman change his mind?
No.
What do
If you
think,
have
Subrata?
customer
No,
love, if you have good business metrics,
Yeah, I don't think we ever make a distinction
No,
of that. In fact,
no.
we would actually want more.
yes.
I'm talking about a lay investor, like a new investor.
A new investor, it's hard to tell. I mean,
No. Absolutely
She
not.
would know, I thought,
No,
because of the
absolutely
platform.
not. Because I've had a girl, and she was from IIT Delhi, right? And very good background, pitched. And it was very interesting because she came from a small town and she pitched in Hindi completely. She was like raising capital like anything, right?
Okay.
Because people just saw the clarity of thought. I always tell this to women, don't make gender an excuse for you to not do things in life. Right? Because nobody distinguishes. If you're creating a great product, if you're showing that there is a return on your business, I think it is a more of your own kind of setback in your mind that you feel a little bit apprehensive. But why would an investor not write a check if he is seeing a brilliant idea, if he's seeing that he can make money? And I think that is important, right? And I think I actually think, and I've seen that happen even at HP. I used to have like a lot of women who used to report to me, and I would always tell them, please don't use your gender to tell me things, because when I'm giving you the opportunity, will you go after it as aggressively as the other person? Absolutely. And if you have limitations, you should accept it and agree to it, but don't then later on after 2 months tell me, आपने promotion नहीं दिया मुझे पर उसको दिया. अरे यार, पर आपने बोला that you cannot travel 3 months in a year, right? So somewhere I think you have to know what you want to live with, right? And I always believe that as a woman, that, I don't think that the world is making a decision because you're a woman and they're trying to target you. I think utna time nahi hai kisi ke paas. That's what I think.
That's wonderful to hear, actually. I wanted to hear
Yes.
that from you,
Yes.
from the both of you, actually. You know, and if both of you had to pick top 3 things that investors look at when deciding which company to place their bets on, can you tell me what those 3 things would be?
Really, the 2 things is super founder quality and a market which will not get completely annihilated by some big guy, right? So if you are in a market, I mean, and sometimes even that is okay because we fought against Amazon and we came out on top, but the odds of that is actually low. So if you can find a market where it is not going to get completely disrupted by a force that is too large, and then you find a great team within that market, those 2 by itself should give you enough confidence to go in. Obviously, you have to do your ref checks and all of that. But maybe little bit of the third is people's. So what happens is a lot of times the team quality can solve the immediate problems. Now, it is very hard to actually figure out, like Sachin and Bini, they were 26 and 25 when I first invested in them. I really never knew how good they would be when the company started scaling. So that was like a positive surprise and in a multiplier way. And they were truly forward-looking as well as willingness to hire people better than them. Right? So those things becomes a little bit of a challenge to gauge early on. So I would still go by the 2 things, which is really good at that empathy, building team, all of that aspect, and then good at the subject matter, and then find an area that seems like has some legs.
Okay. And you?
For me also, exactly what Subrata said, I think founder quality, but the way I look at early stage is how passionate is a founder about the problem he's trying to solve, right? And how deeply does he understand the problem? I think very, very important. And that has usually worked because if you really understand the nuances of a problem beyond the 5-6 slides of the presentation, and if I know more about the problem than the founder knows, then it's of course a no. Right? But also, just the depth of thinking, I think clarity of thought, depth of thinking in early stage becomes very important. And second is, which is also difficult to judge sometimes, is how much resilience can he show and will he stay on this for the next 10 years? Like you ask a founder, are you in this for the next 10 years? And if he is a little nervous, probably not a good bet, right? Because it is going to take time. There's no shortcut. 2 साल में तो unicorn नहीं बनने वाला है.
And even those things actually change.
Yes.
When companies start seeing success, even small successes, I think the founder's ability to then say, okay, something is working, so I need to see the end of this.
Yes.
Right? So, Gaurav from Bluestone, right? I did another company with him, Chakpak, and he kind of left in between. So
That's true.
it wasn't testament to his staying power. It was just that particular thing wasn't working, and he thought it is better to cut the losses, while the other co-founder wanted to continue. So I mean, these are all slightly difficult things to gauge because you're kind of looking into the crystal ball and saying, how is this guy going to develop over a 5, 7, 10-year period? And I don't know. When I was 30, I used to be fairly weird and obnoxious. So it takes time to grow up. So people will grow up, and a lot of them will actually do the right things.
Yeah, and people change, right? Exactly to Subrata. I don't think that somebody stays the same, but at that point of time, whatever data points you have, according to your context, I think you make a decision. So
Yeah, you have to make a decision.
Yes.
But don't leave yourself open to the fact that there'll be positive surprises and negative surprises.
Right.
Which is why you play the portfolio, right? So
Correct.
so you're like looking at 15 different options, and you're trying to pick the best 5, where the 15, maybe the other 10 will not get you the outcome, but these 5 will be really good.
Okay. So I think slowly we are heading towards the end. But before that, just for all of us here, can you take us through maybe in a couple of minutes, a little more than that, how a fund works.
How?
A fund works.
How a fund works. You know,
Like
I think,
from the, like,
so
how do
I
you
think
start?
Shanti alluded to some of these things. So first thing is, obviously, we have to have a good team. And what are the things that we do in a day? We obviously look at new companies, new opportunities. We go talk to our investors. You know, we make sure that the investors are happy with, one, our performance, and their view of India kind of aligns with our view of India. What is it that the next set of things that we think is emerging, all of that. So there's this LP conversation, kind of, you know, new company conversation. But a lot of the time, like Shanti was saying, is meeting with our existing portfolio companies. You know, are they facing challenges? Has something changed? So a lot of our fintech companies, you know, get into, because it's like a regulated segment, they get into challenges when RBI changes a rule. So if we feel like there is a rule change that is coming, can we be on the front of it as opposed to get to know later? So can we almost guess, you know, this is in lending, this kind of change is going to happen. So can we go make a representation with RBI from 5 of the top, you know, 10 companies in India saying that we have heard that you are thinking about this, but can you please consult with us because we'll get affected. So how do you help your companies think through, you know, both positive changes, negative changes in the environment? Then comes this whole thing about your board role, which is, you know, what is the strategy of the company? Like I said, you know, you could do 15 things, but what are the 5 that we choose to do today and why? And then can I help my companies by hiring the best talent out there? So that becomes a part of the day that we are thinking about. We are helping companies interview, we are connecting them with good people. We are actually sitting on some of those interviews. We are trying to sell the company and say that, you know, you're great at machine learning, but here's a company which I think in the next 3-4 years will become really solid. So all of that, and then the most important thing is to think about our returns. You know, where is it, like those 3, either an IPO or an M&A or sell to somebody else. In our portfolio of 400 companies, which are the ones which are going to be something that we want to sell versus take IPO, and it keeps changing, right? So Gaurav of Bluestone, for the longest time, we would have probably sold the company because it was struggling when it was an online-only company. When they set up offline, it is going like this, right? So now we want to...
So were you the guys to advise them to set up offline? Or did it come out of their research?
Prashant, my partner, actually did that job. So he started seeing this whole you know, trend of obviously, you know, other jewelry companies doing well offline, and then we started doing some surveys, and we said, you know, this brand is well recognized, but people would probably want to touch and feel this category because it's a high spend category. So some of these things happened, and then we actually advised them to do that. But now it looks like it will be a great, you know, 10-year story almost. So all of these things, where is our money return going to come from? We have a good sense within our 400 company portfolio, and which are the, you know, top 20% versus the middle 30-40% versus the bottom 30-40%. So we do that analysis on a fairly regular basis. So I would say that sort of, and then hiring our own team. You know, we have to make sure our next generation is hopefully better than the previous generation.
So thanks to all your great decisions, our family is also enjoying quite a bit of that.
Oh, thank you. Meera has been a great support. She was one of...
My sister Meera works with Subrata.
So that was the connect.
Yeah.
And we've obviously become personal friends. And you know, she's been a great asset to Accel.
So Economic Times has given you an award for being the man with the Midas touch.
So
what
you know,
personal traits?
I don't want to brag, but more than that, I have been nominated 4 times by the global Midas touch list.
Wow.
Which I'm the only Indian investor to ever be on that list. But these are all, you know, it's that on a Sunday you go, you know, to play a game of golf and you get a you know, hole-in-one. So it is those kinds of things that makes you happy, but then Monday comes and you know, you don't even know where the golf course is anymore.
No, but I want to know what they saw in you to call you that 4 times globally. Some ESP, some particular trait that you totally
it's
depend
all,
on, maybe
at least-
instinct, maybe anything.
At least now it has become a science.
Yeah.
So it is the amount of capital that you have returned and the stage that you have come in. And they probably give a little bit of advantage to India because it's so hard to build companies in India.
Right.
So I would say those 3 factors.
Okay, so you're being very humble.
No, I mean, beyond that, I don't know. So yes, it's an outcome that has happened. That day, everybody at Accel gets very elated. But then we move on because Monday we have to find the golf course.
So when you did that 16 billion USD and you saw that number going up, how did it feel? I mean, this is like that Mrs. Universe or Miss Universe moment.
Obviously CNBC was waiting for me at my office with all the, like my partner Shekhar had set it up. He didn't tell me. So luckily I actually came to the office. I didn't work from home that day. They would have all been surprised. So I walk in and, our floor, which Shanti has seen, there are these 3 people, camera crew, sitting there to take a live interview from me. And I didn't know what to say, because I was not prepared for it. So sometimes, like I said, these things, you can't get too caught up with the outcomes. Right? Our job is to get the inputs right, and hopefully if we do a really good job at the inputs, some of the outputs will be really, really good. Right? So I keep focusing on that. I keep telling our guys that let's not worry too much about the outputs. We get the inputs right, the outputs will happen.
This is also the South influence of actually keeping everything understated.
Yeah.
Right? Not being the
Yeah,
flamboyant.
I'm a Bengali. So I'm neither South nor North.
But you've been here for so long in Bangalore, so
Yes, I've been
you
at
have
Bangalore
adopted that conservative approach.
more than half my life.
So, Shanti, to conclude, we have a few students here from Symbiosis and Anurag. It's like an exchange between us because we want to, share our mentor pool with them, and in return, they said, "Can you please, for some of such interactions, can you have us over?" So I want you to leave them with, this advice on how to think creatively, how to be brave, go out there and pay heed to that eureka moment that you have in your mind and maybe work upon it.
Very big task. I think just to put it simply, I think we give too much importance to what people think about what you do. And actually, honestly, you look back and that is not how you should decide on what you want to do in your life. Right? I think it's very, very important to just know that from when you're young, right? I always tell my daughter that don't worry too much about what everybody is telling, kaun kya bol raha hai, is it the right? And I know it's very hard in this age of social media and so much of opinions, influences, but I think you have to break out only once. You just once have to say no to something, and then you'll actually realize it's not such a big deal. Everybody else then starts to agree with you because they realize that you're really believing in what you want to do. I think that 1-2 times when you start saying no to something which you don't want to do, and you don't agree with or don't believe, but do it politely, of course, right? I'm not not a very big fan of feminism, aggression, right? I think there is a graceful way to live your life as a woman, right? And still do whatever you want to do and make people around you, accept it, because I think over time you will find the people who really love you for what you are and not for what you do. And I think all that is very subtle, small things, but I think that's the only way to do something which you really want to ambitiously build. So don't give up what you want to ambitiously create, right? Just because you think somebody else is going to disagree with you. You might be surprised, right? And I think creative thinking comes out of just, I think, reading a lot, just investing in yourself, being kind to yourself. If you didn't succeed, it's okay. There is another opportunity. I think sometimes, and I think I used to do that to myself. We are very harsh to ourselves as women. We always feel we have to be perfect. And I think, yeah, multitask I think is nice. I actually love the multitask.
We have to be perfect at everything. I think that is where we are unkind to ourselves.
Yeah, so I
Multitasking
have,
is fine, yes.
yeah, so nowadays I am
But
not
trying
so
to be
much
the best at all
yeah.
times, I think that's
I
where
like to be perfect in one or two things. Other things I will just do it because I love watching Bollywood movies. I love living in my Bollywood world. You know, so it's okay. So I think perfection, I think, is okay. Sometimes it's also good to want to be perfect, right? Because that's when you really put in the extra additional effort. And I think I actually think people should try to be perfect in at least one or two things in your life. Because that's what gives you confidence to do other things. If you're not good at anything, you know, if you're not putting that extra effort, you know, to do actually become perfect, you never create the best version of yourself. So I have a little bit different opinion there. You know? I really think people have to work hard. And I tell my kids, you either work hard for the first 10 years of your life or you work hard for the rest of your life. You can choose what you want. And they're like, okay, thanks to you, we're always the most hardworking people in our company, wherever we go.
I think to replace hard work and commitment, yeah, I don't think anything can replace those two things. And actually, if you see look at the audience here, all the ladies sitting here, you know, they have another side of life, but they give their life for flow. Yes. What we are doing here is totally voluntary. But each one will, once they sign up and once they have said yes and raised their hand, they are there at all times. And thank you so much for all that.
Saying something.
No, I think there are a lot of good points, but one thing I want to reiterate, which is in our lives, we are trying to make ourselves better.
Yes.
So never set the bar at, you know, comparing yourself with somebody else. If you can make yourself better every day of your life, I think you'll end up at a great place. So just you know, if you're students, whatever you are, I mean, even for me, if I could just focus on that, because we get distracted, you know, so newspaper mein kuch aa gaya, somebody else has won, we didn't win. It doesn't matter. You can only get better if you keep focus on yourself.
And I think today's youth is living in a specially difficult age, right? Because there is a lot of just toxic social environment around us, right? And you have to protect yourself from it. And it is hard. It is not easy because even we get influenced by something which is written like what Subrata said, against you, right? Anything. It does impact you. But I think you accept that it impacts you, but move on. I think that is important. Because I always worry for the younger generation today who have been born into the Facebook generation, right? Very difficult for them to understand what it is to not have an opinion, not be able to hear about people's opinion, right? I think it is hard.
Thank you so much, Subrata, and thank you so much, Shanti, for doing this for us. And now we'll open the floor to audience Q&A. Sujita will take over.
Anuradha, Miss Anuradha.
Dr. Anuradha. I'm Dr. Anuradha Reddy.
Can you please
like
keep the question very short and precise, please?
First of all, I would like to thank you all for giving us an excellent insight. And then my first question would be to Mr. Subrata. Like most of the international investors, when they invest, even the biggest of the big world number one and world number, this is out of my experience I'm asking you. To the founders, they give us a lot of trouble. And the stage comes to us that we need to shoo them out with a Herculean task and buy back what we have invested. Not once, several times it has happened. And these are the well-reputed players from world over. Can you please throw some light on this? Why do they do this?
Why do they do this? They probably figure out that you know, the other alternative may give them better returns. But is that the right thing to do? Very questionable. So, for example, you know, at Accel, that is not the way that we treat our founders. So we always talk about, you know, the founders being the guys who are making the change, and we are actually riding on the change, and therefore we are making whatever we were trying to make. So you know, I'm sure everybody has a different viewpoint. You know, and then the way West looks at making money versus creating the right, you know, what Shanti said, karma, I think there's a balance between the two. I mean, for us to survive, we need to make money. So, but does it mean that we need to trample over everybody's heads to get there? The answer is no. So we have to balance that with doing the right things for our companies, our environment, everybody that we work with, and make sure that it's a win-win for everyone.
Good afternoon. My name is Shilpa Raju, and thank you both for such an insightful session. So my question is from a startup investor and founder kind of a perspective. So especially in the early times when we have to talk to a lot of investors in terms to get funding, and you literally, like you said, you have to live that story and tell them multiple times. This entire process of finding the right investor can take a little time, and in that you have a lot of doubts, a lot of opinions, a lot of pressures. So as a founder, how do you stay the course? And equally important, how do you know when to stop and walk away from that and find other options?
That's why we created LetsVenture. Because just to help optimize time for the founders, right? And to be able to, because I always feel the founders, they don't understand the core of fundraise, right? Exactly to all the challenges you mentioned. And that's why we always say, you continue to build your business, I'll help you fundraise. And we typically go back very quickly and tell the founder that this is not going to work. See, sometimes it's not that the idea is not good. It's just that the timing of fundraise may not be the right time to fundraise. You might either be a little too early when you're actually starting to fundraise, which typically happens because founders are eager to go into the market and start talking to investors. So I think discerning the message of the investor and being able to say that probably this is not the right time to fundraise is one way to look at it. The other way to look at it is, are you talking to the right investors? Right? If you're talking to the wrong investors and if they're not able to understand your idea and they're rejecting it, that is not, again, an indication that the idea is not good enough to be funded. So it is again very nuanced.
And maybe one thing I'll add is, it is a difficult journey. So how much ever you try, the rules of the game is maybe 10, 15, 20% of people will be really successful. So not that you're starting out to be unsuccessful, but there is a reality that not everybody will be successful. So how do you kind of balance it? And the way at least I try to do in my life is, there are a few things where I know I can control the outcome. Right? What time I wake up in the morning and when I get to work, I can control. But whether Shanti will show up that day or not, I can't control. So the best I can do is to send her a reminder saying, Shanti, we are supposed to meet at 8, and she'll probably send me the reminder. but so just be practical about the things that you don't control. Right? I find that, very helpful in the way and to tell you the truth, Flipkart has turned out to be a great investment, but there were months when we were burning $91 million. And it was nightmare for everybody on the board because we didn't know enough about the operations of the company as to how this number, which was 30 or 40 few months ago, became 91. And yet, so therefore we couldn't tell them how to change it. And yet it was, really, really a high pressure situation. And Amazon was coming at us and they had infinite money, right? So then we went back to this thing saying, what are the things that we can control? So do we need a new leadership? Do we need to kind of get rid of some categories? So things that we can control, do the best you can, and everything else, try to do what can make a change.
So I must tell you this, how sweet they both have been. Shanti came in yesterday by the 12:10 flight, and she was supposed to come in, but the flight took off at 1 o'clock. And yesterday, today he was going to take the same flight. So I immediately called his office.
Panic, panic, panic.
I said, I am in panic mode. If Subrata takes that flight, he's not coming to my meeting. So they were kind enough to change it, and I'm so glad that they did it. He was here by 11:40, And when his flight landed, his secretary immediately said, his flight has landed, now you relax.
So the backstory which I told Priya is that, because my flight was at 12:10, and being who I am, I had set up a 7:30 meeting in the morning. Okay, and this is the guy who had come from a different city, and he was going to fly back. I had to meet him. So when we changed the flight to 10:25, I told him, boss, I'll not be able to come to the office to meet with you. Please come home. So he came home, and I had to wake up my wife at 6 o'clock to make breakfast for him. So all of that happened, but it is great. This is why entrepreneurs always succeed, right? Or sometimes succeed. That we know how to deal with uncertainties better than most.
But I'm really grateful you did it. Today it didn't happen, but it could have happened, and I could not have taken that chance.
I completely agree. I mean, it is very important for me that you don't panic.
Yeah.
So, generally after that 91 million a month loss, I don't panic. Okay, but I do understand why others could panic because I've gone through that in the past. So I due respect to you, I thought you could panic, and therefore we changed the flight.
No, but I think Priya has been just amazing in terms of just organizing.
Absolutely.
I have to say that absolute attention to detail has been there, and thank you for being such a good host.
It is the only way flow functions.
Yes.
Absolute attention to detail,
Absolutely.
minute attention to detail.
Phenomenal.
So it's teamwork.
Yes.
Through and through it's teamwork. And I think
Can we get some of you to come to Bangalore and help us with some of our events?
you do have a chapter. So Flow is a national organization.
So is it-
Bangalore every chapter is like this.
So,
it's in the Flow DNA.
6 nines accuracy.
Absolutely, I think. And also she had to bear the brunt of yesterday's traffic and gridlock,
okay.
which generally doesn't happen in Hyderabad.
No, we were joking that Shanti brought the traffic from Bangalore.
Perfect, yes. Yes.
On a lighter note, just I'll come to the question later, but yeah, what I wanted to say was, I have been contributing to Flow on many things, including certain policy recommendations and other things, benefits for women, whatever, Though at a personal level, and with my children, too, I have 2 girls grown up, and I've always said, no special benefits. You've got to work and earn it. You don't talk of gender parity if you yourself can't be equal. I don't know what your opinions on that are. I'd love to hear that, though it's not connected to her event theme today, but that's something, I don't really believe in asking for this benefit, X, Y, Z benefit from the government, just because I'm a woman. Give me an opportunity is what I would prefer, but no great benefits, though, yeah, at Flow we work for all this. Now, coming to the question for both of you is, we work a lot on policy recommendations and other things, being the voice of industry. Are there policy changes specific to startups, funding, and more pertaining to women, of course, because at the end we are a women's organization? Do you think there are that we could make some notes on so that it goes into our policy recommendation documents? I'd like to hear both the opinion there and this one.
Yeah, okay. On the gender parity, I think, what I've realized over time, I would never attend an event which was a women's event, which only 2 women would be talking. I'm like, we have to be more mainstream. You can't have, we can't be constantly discussing this among ourselves if we are not able to take it out to the other people who are decision makers and who matter. But I've also realized that we actually, most of us here, come from a little bit more privileged backgrounds, right? So we already have had access to education. We've already had access to a lot of things. I think this narrative around gender parity becomes important when you go to places where actually women don't have as much access as what we want them to have access, right? And that's the reason why you see that pyramid where people start dropping off in kind of corporates, in work life. right? I think there is a need to constantly talk about it, at least subtly, or keep that in focus, because like I said, I realize that even with the Women Investing Network, when you put focus on something, things start to change, and you may not see the immediate change, but even if that gender parity conversation can impact 10 families in a year, I think it is worth that conversation, right? Like I said, I think we come from our position where we don't need people to tell us that you are equal, right? We already have come from families where our parents have treated us equally. And you have 2 daughters, you have always treated them equally, right? So we are already coming from a very different social strata, right? And of course, I always tell people, if you have a son, teach him how to cook. That's the best way you can create gender parity. Treat him how, we have to teach the sons and the next generation men to respect the woman, I think. And it's a very long, different conversation. Right, and that is now I have started to change my opinion. I would think, no, why do women need to talk about gender parity? And I think now I've realized that we need to talk about it because we're not talking for ourselves. We are talking for other people who don't have that kind of influence, who can show an example and say, this is why I want to be equal.
See, clearly there is a challenge in India. India's women participation in the workforce is worse than Bangladesh. So we need to do something. Now, where does it start? I think what Shanti was talking about, it doesn't start in this room. I mean, obviously you guys are doing a great job, but it has to start at the grassroots. So how do you kind of create that kind of a movement? And it is not even, it may not be a for-profit movement. Because if you have to really disseminate information for women in every family that they should think of themselves as equal, it's a long drawn. It could take 20, 30, it could take generations. So obviously something has to start, but I wouldn't say I know what policies to suggest, but clearly there is a big gap.
Hi, sir. I'm Pratibha here. As a founder, if somebody comes to your company, like what kind of support, financially I understand, but what kind of support do you give other than finance? Like, do you advise them, take them forward? What is the journey like as a founder?
So, Shanti knows some of our companies. If you go like Atul from Scriptbox, he will say that Subrata is founder number 1, Atul is founder number 2, and Sanjeev is founder number 3. So it is almost at that level that some of us work with our companies. So in that case, not only did we write the first check, it was actually an idea that I had given to Atul, saying, I think this could work in India. Please go explore because you have the right background. So it depending on the company, but on the other hand, for Flipkart, I didn't have to do any such things because the 2 people there and the team that they got early on was so strong that I only needed to make sure that they don't make silly mistakes. Right? They were going to introduce, cash on delivery, and we were all fairly nervous that, in a country like India, you're going to go get cash from somebody's house. What if they take the product and say, buzz off, right? Didn't happen. So to that level, I think there is a lot of trust still, but we were really nervous about it. But it is not that something I could do, so it was not something I could control. So the best thing I could do is to tell them that maybe start with zip codes where we think people are less likely to swindle us for the money, and then let's see what processes we need there, and by the time we get to central UP, we'll probably be a lot stronger. And I went to school in IIT Kanpur, okay, so I'm saying this with a lot of background.
Yeah, but I think Accel also has a very vibrant founder community, right? So we have a very strong WhatsApp group where founders are posting questions. Very, very vibrant founder community. Yeah.
And it happens at multiple levels, like Shanti is saying. So there are founders for founders. So we are just observers in those groups. We hardly ever, so I would never, respond on those groups because a question gets asked and somebody else will answer immediately. Like, today digital marketing is changing because of Gen AI. Who is the next vendor that I should talk to? And somebody would have already tried 3, so they will tell you, you know. So that help is very tactical and happens almost immediately. Now, if there is a question like, you know, I know that I have gotten to $1 million of revenue, but this will not scale beyond this. I need to do something else. That's a much longer conversation. Now, for me to be, you know, even half useful to that conversation, I need to know what are the adjacencies that are possible for you to go into. Because if you are doing X, you can't turn around and do completely different Y tomorrow. So I need to educate myself as to what those you know, adjacencies are, where your strengths and weaknesses would still play out. So for that, we have, let's say, analysts in the firm. So they will go, you know, get into the details of that idea and say, let's say in the US, these companies had switched from doing X to Y, so maybe we can try that. And there are 5 different options. So we then sit down with the founder and say, this is what our intelligence is saying. Do you think any of these is viable for a new business for you? So it is like depending on the situation. We run an Atoms program where we put 250, 500K, which is a really small amount given that our fund size is now 700 million. But it comes with a partner's time. One partner will spend almost like a regular investment, the same amount of time with the small company where we are putting a little bit of money. Right? So we actually try to do a fair bit.
A very good evening, Subrata sir and Shanti ma'am. Thank you so much for your time here today. For a little bit of context, my former employer of the last 9 years, Dipinder Goel from Zomato, is quite a contrarian type of an individual and a very unique cookie, if I may say. And I know we've discussed a little bit about how do you identify qualities in founders before you've worked with them. But my question to you is more on the hindsight, right? Like when you're sort of looking back in your experience working with hundreds of founders, were you able to pattern recognize some very common qualities that have actually made the top 1% of successful founders really deliver those disproportionate results when compared to the rest of the 99%? If yes, which are those qualities?
I want to hear your answer.
So, you know, even before Dipinder, there was Sachin Bansal. Very, very unique character. Absolute straight shooter. So I remember this one time where an investor was saying, you know, you are asking for valuation X, let me do it at a lower valuation Y, and for you, I'll make sure, you and Binny, I'll make sure that the difference between X and Y, I'll give you extra shares. And this guy thought for 10 seconds and turned around and said, you know, what about my employees and the other shareholders? It just doesn't work for me. So either we all get X or we all get Y, right? So very, very, you know, ethical, but very opinionated. So, and then he would have opinion about everything. So things like, we would have this discussion about the environment, and he would say, you know, India should stop private cars and make everybody go in buses. And it is actually correct. If you look at it, 50% of India, let's say Bangalore, goes by public transport, and it's a broken public transport. And the other 50% is using the cars, and that is really polluting everything. So if you could get 95% or 100% in public transport, it'll actually clean up your cities. So it is radical, but it is correct. And somebody needs to analyze the data and, or even ask him. He would have, you know, come up with his opinion because he would have done that analysis at the back of his mind. So things like that. So you will find people in this 1% who are completely opinionated, and most of the times their opinion will probably not match with yours. But you need to ask them to kind of, you know, justify why did they get to that opinion. And with the same data point, if you come up with a different opinion, then fine. But if you haven't even thought about what they have thought about, then you should like say, oh wow, I mean, this guy is actually thinking a lot more detail than what I can think, right? So things like that, you start exploring and you start finding out about founders. So basically, coachability, learnability, I would say in, you know, one dimension. So they would have a very strong opinion, and they would have the right backing why they came to that opinion. You might be able to tell them that, you know, with the same data set, I'm coming with a different opinion, and this is why. And they might sometimes agree with you, and they might sometimes disagree with you. And then if they disagree, then you have to figure out, how do you kind of, what do you do? I mean, typically you would say, you are the founder, so it should be your decision. So you do what you think is right, and if it doesn't work out, come back and tell me. Right? But you have to let these guys blossom. Don't put your constraints on their thought process, because it's their thought process that can make you win. So that's the one thing I would,
Yeah, and actually, if I may add, you're absolutely right about the strong opinions part. And one of the things that I've learned as well is that yes, having strong opinions is very important, but it's equally important to hold them loosely, which is precisely what you said, that if there is a contrarian view to that, then you're also very quick to kind of change that opinion and do whatever makes the most sense at that point in time. Thank you.
Yeah, and sometimes, there'll be like a board meeting where Sachin he's giving us the data and saying my implication of this data is X, and there are 3 other people who are saying, no, that doesn't mean X. Please go back and reconsider. Maybe next day he'll come back and say, okay, maybe you're right.
Good evening, everybody. Thank you so much, Subrata sir and Shanti ma'am. Had a lovely, wonderful session. Thank you for making us a part of this. My question is to Mr. Subrata sir. I'm asking a non-technical, simple question. I could not stop from asking this. I've been thinking, let it go, but I just want to, maybe a minute of yours to tell me this. Whenever you're deciding to invest, maybe in your earlier days, you can pin out an example and tell me, what is the role of your instinct? Have you ever gone against the market dynamics and the business dynamics and followed your instinct? And maybe you have failed on it or might not have failed, and whenever there is a battle comes between where do you want to invest and you really want to go ahead with what you are feeling, but the market dynamics are clearly saying, don't. But still you went ahead. And if there is an example, tell us. And how fruitful it turned out to be, or how disaster it turned out to be. It became, you can...
So Flipkart is again a classical example. They had come with these 25 to 50 books. And I actually spoke to my partners. And we were trying to assess, during the life of this company, how much capital would they need. And we had at that time a $64 million fund. And we were going to invest about $1 million at that time, right? And then I told you the math and how the funds work and all. So maybe best case, we would be able to invest maybe 7, 8, 10 million into one company. Not more than 10% usually, maybe 15% in an outside case. So maximum kitty is between 6 to 10 million, let's say, right? So, and then our back of the envelope math came out that for this company to be really big, I don't know what that really big number at that point was, it would require $200 million, right? We ended up burning $2 billion, but that's we figured that out later. So 200 million, where is this 200 million going to come from? We can put only 6. So you have to find other people who will put in this money. And so he said, oh, okay, let me go find other bigger investors who will split this round with me. There's 1 million, let's do $500,000 each. So I went and spoke, I don't want to name the guys, everybody who was there in Bangalore, because we knew everybody, right? And we were not hyper competitive, it was a small fund and all of that. Everyone, for some reason or the other, said, no, this doesn't make sense, India is at this position.
Subrata, at this point, I would like to say if Flipkart had come to some of us, or maybe one of your people who refused, they all thought it was a courier company or something. And
no, it was not that. It was, we knew Amazon, right? We knew, some existential, companies in China and in Brazil. So these things can work, but how much capital does it take, and then who's going to take the other risk? So basically, because everybody was saying no, it actually came to my gut. Because my partners then said, everybody is saying no, but you decide. So the good thing is I decided to say yes.
So that is the ESP I was asking you about earlier.
That's a ESP which you can't really put a quantum on.
Okay, my name is Ananda, and just trying to understand that the purpose. When you invest, is it only business, or do you even look at any priority? You have access to so many resources and so many founders and so many ideas come your way. Do you even prioritize areas which really require our attention now, like climate change or climate resilient products, which we really require? I mean, do you even do those kind of missions feature, or is it pure business?
So, and this is what I do, and I preach vociferously at Accel. Okay. So I tell our guys that during the day, while you're at the office, your job is to maximize returns for your investors. Now, there are a lot of other things that you can do. We have set up a CSR so, while we don't need to, we are not a public company. We have actually set up a CSR within Accel, and we have given every employee the right to invest a certain amount of capital every year into projects that they really love, and which includes some of these things. In investing?
My question is not to do with CSR.
Okay.
No, that is understandable.
Yeah.
But to invest in projects which have impact on, these kind of things,
Yeah.
like,
So impact investing we wouldn't do today, because our charter, so when we raise money from, if it was my money, I would do it differently, right? Which is what the CSR thing is. But when we go to our LPs, like the investors, limited partners, we tell them that here are the kinds of companies that we would be investing in. And these are really 5 to 6 sectors and technology-driven companies in those where we feel that there is a non-linear outcome possible, right? So therefore, with their money, we can't just change the charter and go into doing something else.
Thank you.
So the 6 areas actually talked about on our website. We do consumer internet, which is, let's say, Swiggy and Flipkart and all of those. We do SaaS, software as a service, which is, let's say, Freshworks, which went public in the US. We do a lot of fintechs, which we spoke about. RBI keeps shooting down some of our companies every now and again. That includes, investing. It includes lending. It includes sometimes microfinance. It includes B2B lending. It includes insurance, so fairly broad. Then we do what we call B2B platforms, which are basically not consumer, but companies buying from each other. So a bunch of platforms like that. So I'm on the board of this company called Moglix and Ninja Cart. So Ninja Cart does fresh fruits and vegetables. Moglix does your regular enterprise buying. There are 10, 12 other companies in the portfolio. And the last one is health tech. And then the 6th one, which is kind of somewhat there, is this whole crypto and related. But we haven't done space tech, for example. We haven't done climate. So those sectors don't appear in our purview.
Good evening, Subrata and Shanti. Excellent session. We were, throughout the session, I think none of us even moved an inch. It was absolutely mesmerizing. So most of us are founders here, or come from a family of founders, or our spouses, or I'm a founder myself. When is it, the $1 million question, if and when, what are the markers that we think that we should be approaching a VC? So this is a question that comes to most of our minds maybe every year, once or twice. Should we? Shouldn't we? Now, later, should we wait? Is it time? Are there any markers we should be looking for?
So the only marker that we try to, really what we talked about, right? So founder quality, and is the space interesting enough where a large company can still be built?
Should we be looking for a marker?
No,
the founder.
You have to look at what we look at, right?
Right.
So now, if you believe that you have a truly unique founding team, and they actually personify, what Shanti and I were talking about, which is they kind of cover most of the aspects of that company building at the early stage, and they're very good at what they're doing, so they have some unique insights. So then the team is a checkbox. Now you have to do a little bit of analysis on the space, and the best way to do that analysis is to look at all the adjacencies and see large companies that have got built, right? So let's say when we were looking at Flipkart, commerce in India was a 600 billion industry, now it's a trillion industry. So if you could move 1% of that, let's say 10% of that online, it'll be massive. So that was the assumption that we came with. So things like that, you have to assume that what is the adjacency that you are trying to disrupt? How big is that industry? Is there a lot of competition in that industry or not? So if you can answer these two broad questions, you should approach a VC. And you know, typically what you should do is go to one or two top tier guys and one or two mid tier guys. And you know, so that you have not exhausted the entire list in each of the categories, and you will get the feedback. The first thing they'll tell you is, we think that this may not, the way you are thinking may not be a large company. And we'll give you, I mean, like the same Sachin conversation, we'll give you our point of view. We may not be right, because you are in the trenches, you are doing the detailing. But looking at what you just told me, I feel like this may not be that big. And you can always say, okay, give me a month, I'll come back with answers to your questions. And it happens all the time. We go back and forth with companies, and when they have actually proven to us that they're really building something which can be big, we'll say, okay, we made a mistake, let us put in the money.
Right, thank you. So it really
Did that answer your question? Or?
It did answer the question, and also the fact that there is really no big loss in actually going and trying, because you're just going to understand better.
Yes.
So yes, it did answer the question.
And we now have fairly sophisticated, so 400 companies. If not anything else, we'll probably be able to understand something about that 6 spaces that we talked about.
Because India traditionally comes from a family business background also primarily, and traditionally it is not thought that we should be going out for a VC. So yes, you did answer it, so thank you.
Okay, thank you.
Thank you.
Yeah, but just to add one point to what Subrata said, that you should also realize that the moment you take the first external check, you're accountable to someone else and you're on the treadmill. Yeah. Right? So you want to be cognizant of that.
The treadmill, let's pull that back.
Pinch of salt?
Yeah.
Shanti, you think you're on a treadmill? You would have done this no matter what.
No. What I'm saying is, because there is a pressure to deliver returns back to your shareholders.
So she's saying you become accountable to an outsider.
You are, but the way I look at my life is, every day I get to do what I love.
Of course, absolutely.
And I have investors too, but I don't think about them every day. But I'm getting to do what I love, so why not? What else would I be doing?
Absolutely. Absolutely, I would love to do that.
You didn't want me in there?
Yeah, actually, I think we would love to.
For women. So,
No.
And also yesterday she has a debt equity kind of session, which I'm very interested and I want to talk to her about.
No, absolutely. So we also offer debt to founders.
Okay.
So any of you SMEs, who have not raised funding but have cash flows, are actually doing good business, but you need debt to manage your cash flows, right? So basic working capital, we also offer that to founders outside of equity. But we would love to do a win session, and I would love to have Subrata as part of that.
I don't want to force myself into that one.
Then we can have many more women joining the LetsVenture.
Yeah, so actually I have a lot of women in my leadership team, and it has never been consciously, I've never said I want to go hire women.
No,
I've
I'm
just
not talking
found
about
them
hiring.
as
You will have more investors coming from the women sector. More,
Absolutely, yes.
And as a curtain raiser, we did a masterclass on angel investing. So most of them, most of them have the basics right.
Yes.
So we are all raring to go now.
Yes, absolutely.
Please create your accounts today.
Yes. No, we could actually create a syndicate just for Flow. Hyderabad,
that's
right?
what
Which is like a private network, right? Private network, where you can then look at the deals, you can discuss it among yourselves. If you want, you can then start investing. And we do that for a lot. We have about 40 private networks on LetsVenture, where people actually come together, and I'm happy to enable that for you.
Absolutely, thank you so much. And we will discuss on how to go about.
Priya was actually looking forward to take this session before the year began.
Yes.
But somehow things didn't fall into place. What she was looking for and what they were offering were not matching. Okay. I think your conversation actually put this.
So I think this was meant to happen, karma.
Yes.
Yeah, so I think my question is coming at the right time.
So as a private investor, I wanted, this question is to both of you. As a private investor, I wanted to know if there's a particular ticket size, for investment, a minimum ticket size for investment. That is question number one. And my second question is, as a private investor, what are the different kind of due diligence that I can do? Because today I notice a lot of public information. I'm not so sure if that will really, lead me to the right input for investing. So of whatever is publicly available, what are the information sources I can trust, so to speak?
So, and as an individual, oh, sorry, I must have. So, are you asking about quantum of investment that you should do? So again, the way I was explaining the fund, I would probably, if I had the same amount of money as an individual, I'll try to do similarly, which is, let's say, take 25% of the money that I want to invest and kind of create a portfolio, and then work with the portfolio, maybe take 40% of the portfolio, put a little bit more money, and try to get also external validation, which is other investors to put in money. And then for the ones that do really break out, keep the rest of the money that way. But the challenge is the timeline, right? So because the ones that mature take a lot more time. So you might have to throttle this to say that, I'm going to, let's say I have $1 million to invest, I will do it over a 5-year period. Right? And now you apply this backwards. So something like that is what I would suggest. And what was the second question? What sources of data to look at? There are a lot of data, like traction type of, you guys, maybe you can answer that question.
Yeah. So basically the due diligence, sometimes I think you have to depend on an external party to do the due diligence, because while you might look at publicly available information, I think you also need to look at governance, you need to look at, a little bit more detailed data, because founders tend to sometimes put data on their presentations which may not actually be the data which is there in the company, right? So you actually work with third-party companies, and we do that at LetsVenture. So when an investor invests into the company, we actually offer them the DD reports. We actually do financial diligence and legal diligence. Legal diligence more from a perspective of just making sure compliances, making sure that there are no outstanding on debt, right? Making sure that there are no governance issues in the company, right? Because sometimes the founders don't even know that there are such issues because they are not keeping an eye on it. So diligence, I would recommend that you always work with somebody who actually understands what to look for diligence. What you are talking about is looking at data to help you decide whether you want to invest in the company. So there's a little bit of detail there.
One last question before we end the session.
Good evening, everyone. I'm Hema Mangnani from the travel and tourism industry. My question is to Shanti Mohan. So you have spoken about WIN and, the syndicate and all that. Is there any way we can, if I want to invest, right? So how do I get into the community and what is it? And because we didn't know, I didn't know about this, right? So where does one look at it as a woman entrepreneur if we want to look at investment? Which is the platform where you're there? Like, how does one look at it?
So on LetsVenture, and we are bound by the regulation here, you have to be an accredited investor to start investing into startups. And that's the requirement for which SEBI has given us, which basically means that you need to have a net asset of 2 crores outside your primary home to start investing. And you have to commit to investing 25 lakhs over 5 years, which is actually not bad. It's about 5 lakhs a year. Right? So it's really, that is the first criteria. The second is, like I said, we have a WIN program. We also have an online video recorded about 18 hours of investing content on LetsVenture, which you can actually look at. But I think that's not very helpful. I think we should talk about seeing how we can do like just a WIN session for all of you, like for a day, right? And I think we need an entire day, like we need a time, because when I used to run these angel workshops, we would start at 9 in the morning, we would go on till about 6 in the evening, because it is a little heavy, like you can't just absorb everything together. And that's the reason the win session, we were doing it over 4 weeks. We were doing Friday, Saturday, 2 hours each, right? Because you're trying to, and then we would bring in speakers. But if you were to just look at it simplistically, we can do a day, like a day-long session, and we can actually complete it. After that, once you understand that, I think then it's a good time to start then looking at deals. We will start sending you deals. You can discuss the deal. We can anyway do that. You don't have to go through the win session if you understand the basics. We can create we can have a WhatsApp group where we start sharing deals. I can share it with Priya. If you have questions, and you can come back to us. You know, we can actually start the process.
So we can send out a Google form, and whoever is interested can sign up, and then I will take it to Shanti, and then we can take this forward. So how many hands are going up? Okay.
And you know, you don't have to write a check.
We need you to stand by us. Yeah.
You know, you don't have to write a check. You can take 6 months to write a check. I always say people don't be in a hurry to write the first check. There's nothing you're proving to anyone, right? I think you have to feel comfortable writing that first check. And once you write it, once you start understanding the details, then you can start investing.
May I now request Senior Vice Chairperson Pratibha Konda to deliver the vote of thanks.
Good evening, everyone. Today, we've had a privilege of hearing from 2 remarkable individuals, Ms. Shanti Mohan and Mr. Subrata Mitra. On behalf of Wikiflow, I express our sincere gratitude for generously sharing your insights and expertise with us. Your guidance will undoubtedly serve as a beacon for inspiring entrepreneurs and investors alike. Your journeys in growing Flipkart was very interesting for us to learn about the whole story. Sir, and Ms. Shanti Mohan's Vyavahar Pehle and Vyapar Baad Mein will always resonate with us. A special note of thanks goes to our past chairs and the events team for their tireless efforts in organizing this gathering. We thank our audience for their active participation. We are also appreciative of the support from our sponsors, our platinum sponsor, Tira by Tubarumals, initiative sponsor, McLean, and gold sponsor, Oro Jewels. As we conclude, I invite you all to join us for high tea, where conversations can continue to flow and connections deepen. Thank you once again, and we may continue to strive for excellence and success together.